Hi, I'm Jeff Turnahoy, Head of America's Research at Lipper, and today I'm joined by John Hathaway, Portfolio Manager of the Tocqueville Gold Fund. John, thanks for joining me.
Thank you, Jeff.
John, let's talk about your fund's strategy. What separates it from its peers?
We're a sector fund. We invest in gold, in the gold space, and we invest in mining stocks as well as the physical metal itself. I think what distinguishes us from many of our competitors is that we have a strong research group. Not only myself, I've been doing this now for 14 years, but I have a group of 3 other analysts, one of whom is a geologist who's been with us for 10 years, and 2 younger analysts, one of whom was a investment banker in the gold mining space with a major investment bank, and another person who grew up basically in the mining industry. So we have a tremendous amount of perspective on the industry, and we also have a budget to visit mines all over the world. In the last 5 years, we have traveled as a group around 500,000 miles, and this is not the Club Med spots. We go to Burkina Faso, north of the Arctic Circle. You get the idea. It's basically a lot of remote locations. So we come back with an idea of what we're investing in terms of the assets, the political risk, all of that sort of thing. And I think that gives us a better insight into what the underlying assets are and the real issues, as opposed to reading Wall Street research.
Is your analysis of the gold as a physical asset versus the gold mining very different as far as whether it's a top-down or bottom-up approach?
I would say to be invested in gold, you start with a top-down approach. You must take the point of view to even think about gold that we're in an age of monetary debasement. And that's kind of a top-down thesis. And I don't think we have time for me to go on that rant, but I could, but I know we're limited. So the way we execute the strategy is by having some physical metal. About 8 or 9% of our portfolio is in physical metal, and that's kind of an anchor to windward, let's say. And then the rest of it is mining stocks. And the theory of mining stocks is that if the gold price goes up, we have a leveraged, dynamic way to participate in that through the mining shares.
Okay. Now, do you think this strategy is more appropriate for a conservative or an aggressive investor?
For the conservative investor, I would weight the exposure to gold towards the metal itself, whether it would be in the form of GLD or some other variation of that. The only mistake you can make by owning gold is by having either too much of it or paying the wrong price. But it never goes out of business. There's no counterparty risk, all that sort of thing. Okay. So but aggressive investors who want to participate in this thesis in a more dynamic way, the gold stocks make a lot of sense. And so it really depends on the risk tolerance or tolerance of the individual investor. Okay.
Do you have an outlook for gold this year? I know it's been struggling of recently.
I absolutely do. I think we've made a low. I think it's a very important low. I think it's right here, all the signals that I look at based on sentiment, technical readings, anecdotal, I could go on and on, are flashing a buy signal. I think, you know, if you were to wade in right here, put the toe in the water, whatever, you'll look fine in 6 to 9 months. The bigger question is whether gold is still in a bull market. And we kind of went through this in 2008 when the world was falling apart and gold was under a huge amount of pressure. And what I said then, and I'm on record as having said it, is that in order to bail out the system in 2008, the Fed would resort to extraordinary measures, which of course they have done. And right now we're kind of in a period of calm for the capital markets, but I think, personally, I think it's the calm before the storm. And you know, it's fine to invest in the S&P and that kind of thing, but in my mind, when you're facing tectonic change in the financial system, it's like picking up dimes in front of a bulldozer. And if you really want to get the trade right, you should allocate in a strategic fashion to the precious metal space.
Okay. When it comes to the gold mining stocks, do you tend to favor the large cap or the smaller cap miners right now?
We have a balance in the portfolio. We're roughly 60% large cap, 20% medium cap, and 20% small cap. The most value generation comes from the 40% because smaller companies are capable of growth within an industry that doesn't grow. The large cap companies, if they do their job well, basically provide you with a long dated option on the gold price. Smaller companies can actually grow either through exploration or mine construction. And so we don't vary that too much. We will, from time to time, shift the portfolio. Our turnover is quite low. It's less than 10%. So we are not in this to be clever traders. I'll leave that to the really smart guys who get on CNBC all the time. We just stick to our knitting. We follow specific companies. And if we find good ones that we like, we kind of let them run by themselves.
I know that you're bullish on gold. Do you think it's going to be a smooth ride up, or are investors likely to counter a lot of back and forth movement on their way up?
Oh, it's not a smooth ride. We're fighting City Hall on this thing. And so, the prevailing conventional wisdom is that all is well. It reminds me of Animal House, all is well. Keep calm. For those of us who may not agree with that the system is existentially challenged, having gold makes sense. But most people don't want you to think that. And so often, especially at a time like this, I think we feel more or less alone, and certainly, I have to admit, demoralized because of the drawdown we've seen over the last 2 years.
So John, would you say this is a good time to be bold in gold?
Absolutely. When, as Baron Rothschild once said, when there's blood running in the streets, that's the time to buy. Now, I know it's really hard to do emotionally, psychologically, any other way. When the risk is perceived to be the greatest, it's actually been priced into the stocks. So I consider this to be a terrific entry point.
Very good. Well, thank you for joining me, John.
Thanks, Jeff.
On behalf of Tocqueville Asset Management and Lipper, I'm Jeff Turnahoy. Thanks for watching.